Hi guys, it's Nick here. I just want to update you, and it's about a trade on the Euro Australian dollar, an aggressive bounce along. I will show you what you can do if you're not already in. So, what happened to the Euro Aussie? We have actually a down move on the lower time frames, right? According to the weekly chart, this pair is still kind of retracing, but if you look closer, you see that the price bounced up here, created a lower high on the 36 and moved below that. So we have a downtrend on the lower time frames for sure. And we also have horizontal support coming from down here, this previous retracement last year, November, or was it October, whatever, down here, price moved up and it reached the same level again. So you can take a look on the daily chart and you'll see that this is a powerful area, support area. Why? Because we had this previous support coming from last year and a lot of space between that. There was nothing really at that level, and then the price reached on this chart, on this daily chart, the 633 EMA, the EMA I like to use a lot. And what I was looking for, because you already know that if the price touches the 200 or the 633, especially on a higher time frames, also on lower time frames actually, but we want to look at take a look at higher time frames if possible. And the price went down, it hit the 633. The support line was a little bit lower here, so when it touched the the 633, that was the first time I paid attention, because I wanted to see if the price will bounce. And in the case of a bounce off the 633, I would try to trade against the main trend to target the 36 in extension, my trend line here, where I have my 3 and 4 and more touches. Okay, so price did not bounce. Actually, if you take a look closer, you will see that the price actually moved lower. So it also closed lower. The next daily candle closed lower and the other one closed lower. And when it reached our area of support, that was the 1.4050 area, okay, what happened the next day? The price actually open higher a little bit, okay, but it didn't close really lower than the previous candle. It didn't break this area of support, it closed higher. So what I did then, I switched to the lower time frames, looking for aggressive bounce trade in this area. So let me switch back to this. So it is aggressive. It's not for everybody, but you get the point. So as you can see, price creating lower highs, lower lows. It's still moving down. Then it has trouble here, and it creates a first higher low that is not even visible on the 4-hourly chart. So we have to switch to the 1-hourly chart. In the on the 1-hourly chart, you'll see the price created the first higher low, but it created higher lows earlier, of course, on the chart. But this was the area of major support, also close to our 633, right? So we had this major support coming from the weekly chart. We have a round number, more or less, 140.50 area, right? So the price doesn't stop exactly at these numbers, but it's the whole area that is important. It created the first higher low, and then it moved up. So when I saw the first candle after the higher low, I took the first buy. Now, what happened? I took more lots, 5 lots here, which was like 0.5% of this account, and price moved higher. And when it moved higher, created another higher low here. I aggressively added to this positions during that breakout. Okay, this is very, very aggressive, and you shouldn't do it. So all in all, I'm risking 1% on this trade, which I already made back, because with a stop on both, right? I have a stop below our major support, way below, like about 13 pips. This is enough, including the spread of about 30 points, right? 30 pips stop. So when the price reached the previous highs here, we say generally 30 and 60 pips, to create a win-win scenario. So I did it a little bit differently here. I waited for the price to move up about 15 pips, and I closed almost two parts, sorry, no, yes, almost three parts of the first trade. And when I entered here, I did the same thing. I took out also another lot up here. So right now I have half of the positions running, and hopefully they make more. So what happens now? I don't touch the stops yet. What I want to see is if the price, if it's bouncing here, if it bounces again on the 36 EMA after the retracement. Ideally it won't retrace that much. I wouldn't like it. I mean, it could, that's why I have the line, but I would love it, of course, if it's only retracing a little bit, but whatever. So if the price comes back down and bounces on support, then I know, okay, my positions are kind of safe. And if the price creates a higher point on the chart, I will take my stop and trail it below that line, and then I have a win-win scenario for sure, because all the positions will be in profit. The target here is, to make it quick, on the daily chart, as I mentioned before, to make with a first position, sorry, with a second position, I'm aiming for the previous low. So with other words, I want the price to move up with a 35 pip stop, another 70-80 pips. Then I have about 150, 160 pips profits, and about 240 with a second one with a 30 pip stop. So actually this would grow the account kind of quick, and that was a little bit aggressive, but sometimes we do that, right? I like to do that sometimes if we have a reason for it. Okay, so I know that is not for everybody. It's just an aggressive bounce trade. Everybody else should look, now that we have the first green candle in making, look for setup on the 4-hourly or 1-hourly chart. Wait for the price to create this 1 to 3 ideally, and then you can still trade against the main trend and target these areas that I have here on the chart. Okay, I hope the video was helpful. Catch up with you soon, and bye for now.